Wall Street's wrong again.
Oracle's stock price has been on a tear, a straight diagonal up. It's up 80 to 100%, depending on when you might have bought it or when you might have been holding it. Does Wall Street give us some insights in this case on where the stock may really be going from now? Can it continue this upward rise, or is there a topping coming and it's going to turn around?
Watch now to find out what we really think about Oracle and what we really think about whether you should trust Wall Street today.
Stock earnings and favorite pastime.
So let me just say,
Wall Street
It's
why do they
2.5x.
Because their compensation goes up.
Wall Street's wrong again.
So in yet another example of what's wrong with Wall Street, Oracle, the stock price of Oracle, the target price, Cantor Fitzgerald, which people know well, went from 216 as a target price to 271. Now, part of the reason is because it blew through 216, and then they had to say, all right, let's set a higher target for it. Scotiabank also came out and said Oracle has an outperform, right, with the white heat of the AI revolution as part of their statement. So the real issue is, right, do we believe in Wall Street buy, sell recommendations? Of course not. Right now at Oracle, 100% of the banks following Oracle have a buy or a hold rating. 100%, not a single sell. You say, why don't they have a sell? What's interesting is the target prices in more than half of these buy and hold, the target prices 12 months from now set by Wall Street are lower than the current trading price. So you've got this nudge, nudge, wink, wink that I always say goes on where the research analysts, they have to say buy and hold to make the bankers happy, the bankers at each of these investment banks happy, because they don't want to say, why do you have a sell on Oracle? How am I going to get any banking business? And that's the point, is that Oracle is doing a number of big banking deals. The bankers don't want to lose the business, and they're putting pressure on the research analysts, which they always do, to say, hey, it's not enough that you've got to buy and hold. Your target price is below the current trading price. Do something different. And now we're seeing the target prices rise because the bankers are saying you better raise those prices, because I don't want Oracle's CFO and management team to say, why should we do business with you, Scotiabank, if you guys don't have a higher target? Why should we do a business with you at name your bank, really? And so that's the real issue. Now we look at what's buried in. And Rob, if you have any thoughts on this, the stock has been, a perfect diagonal upward in the last couple of months. And we look at what's behind it. Return on assets under uniform accounting are much, much, much higher than GAAP. The GAAP accounting numbers do not reflect reality. GAAP accounting destroys the value and understanding of purchases, of acquisitions, of mergers, of R&D, of leases, of stock options. I could go on, where the finance world,
all
the
things
CFA
that Oracle
world
does, right?
Right, all things that Oracle
does a ton of.
Right, and in Oracle's financial statements, and FASB and the accountants, are in violent disagreement with the CFAs. The CFAs and even the CFOs have said, the CFOs that have polled have said, we don't believe that FASB matches reality, particularly for tech companies. So anyway, there's uniform accounting. The company has a much, much higher return. It's much more like a 30-40% return. What's interesting is those Wall Street analyst target prices that are so low are reflected by their deep pro forma forecast. So when the bankers are putting pressure on the analysts and say, you better, make it easier for me to sell banking business to this company, the research analyst says, okay, don't worry, I'll put a buy and a hold on it. And literally right now, 95% of ratings are buy and hold. Only 5% are sells. That's across all the biggest banks, across the S&P 500. It's ridiculous. It's like, why would you ever listen to a buy-hold rating when it's always buy or hold? But they're then putting pressure on the target prices, and some of the target prices have been coming up. Most of them are still below the current trading price. But what always takes time to get fixed is in the back of the research reports. If you've ever looked at the entire research report, not just the front page, not just the headline, they put in pro forma financials where they literally say, here's what I think revenue, income, CapEx, capital expenditures, margins, turns, you name it. They put in detailed pro formas for the next 2, 3, sometimes more than that. We take those pro forma forecasts, we convert them to uniform accounting to get apples to apples, And what it suggests is the Wall Street analysts are still so down on Oracle that even they've got 100% buy and hold, even though they're slowly raising the target prices, they're way behind on fixing the pro formas. And that's where we get the real detail, that the pro forma forecast for Oracle suggests that the returns of this company are going to continue a downward decline, while very high, but declining into the next couple of years.
Well, I mean, right, Joel, I mean, we wouldn't say that their estimates are behind. Their estimates are just showing the truth, which is right. Well, what I can effectively say, what analysts are saying is the white heat of the AI boom is lighting Oracle's profitability on fire, right? Effectively, well, to your point, to pay lip service, they're saying, hey, we're going to boost our estimates. And we're going to boost our stock price target, and we're going to boost our recommendation in terms of buy, sell, hold. Yeah, but we also recognize that Oracle, right, everybody, for context, what Oracle is doing is Oracle is going from being historically mostly a software firm that also sold servers and had a little bit of a data center business. They are investing massively in data centers. And as they invest massively in data centers, Joel, right, data centers are lower return on asset business than software is. So lo and behold, right, the ROAs are getting pulled down.
In general, anything that's it's not like you're going to have a competitive advantage in your data center. It's still going to be a big warehouse. It's still going to have a ton of air conditioning. It's still going to take up land. It's still going to use up electricity like crazy, right? And you put all these things together, you say, so why would one data center be much better than another? So when you have Oracle growing into that area, and that area of the industry, of their industry, is a much lower return, no wonder the Wall Street analysts are putting in pro formas that say, man, these returns are going to fall, meaning the amount of assets you're going to have to put in to get those additional revenues is going to be a lot more than they have historically for their prior revenues, which means the ROA falls. But the pressure from the bankers is coming in. And so this is the three things we always look at a research analyst report. We look at the buy hold just for giggles, because it's a joke. Then we look at target price, which sometimes has some meaning. Sometimes, and in this case, the fact that more than half the analyst target prices are lower than the current trading price, what does that tell you? And then on top of that, the pro forma forecasts in the aggregate, in the back of all these Wall Street analyst forecasts, are saying, no, we think returns are going to collapse. All right, so that is what Wall Street's really thinking. Now, what is the market thinking?
To your point, Joe, there's a reason why, right, the market, why half of Wall Street's price targets are so low, and it's because of embedded expectations, right?
So the embedded expectations to get to Wall Street's, to get to Oracle's stock price from the stock market, right, to get to $700, a $700 billion market cap and $250 a share, you need returns to go to all-time highs and stay there forever. This is a classic. This is where Buffett says, I don't look for 7-foot hurdles to jump over. I look for 1-foot hurdles to step over. This is a 20-foot hurdle. This is a 20-foot hurdle. This is, you better be long jumper, amazing performance, Oracle, and you better, and I wonder if that really is possible. I think they've been caught up in the AI boom in terms of the momentum of the stock price. But when the analysts are there, and this is one of the cases where we don't agree with the BS buy hold, because how could anyone agree with a buy hold that's 95% buy hold all the time, right? The target prices seem to be more meaningful, that half of them are below. But when you look at the pro forma forecast, I think the Wall Street analysts might actually be, giving a hint as to what they really believe, despite the 100% buy hold. And that is the opposite direction of what the stock price requires. That is a very, very, I have to tell you, the quants run screens on this, the active quants, and the screen is, what is the expected ROA to meet the current stock price, and what do the pro forma forecasts, not the target prices, not the buy hold, have for it falling? And when you compare the two, that would screen out of almost every quant screen right away. You would have quants going, no, I'm not buying this. So there is a lot of excitement and momentum in the stock, but man, is it expensive relative to where it may really be going. In Wall Street, as wrong as they are, this might be one where the back of the research reports may have it really right.
And to hammer home, everybody, the reason for this disagreement is what those Wall Street analysts know. Those Wall Street analysts know that this company is plowing a ton of money into its data centers. And to do that, it has to borrow a bunch of money. They've literally gone through the process of issuing, I think it's like more than almost like $15 billion of debt in so far this year, basically in the last, in the last 12 months. And everybody, guess what Scotiabank and guess what Cantor wants? They want some of that banking business. And so they're trying to be extra nice to Oracle. And that's the bigger issue here. When we talk about the idea of Wall Street's wrong, again, it's not that Wall Street's wrong. It's that Wall Street's just not telling you the truth. And this right here is why listen to the estimates for Wall Street. Don't listen to the buy sell recommendation, because there's no way that they're telling you that Oracle can do that. So that's this episode of Altimetry Authority. If you like that, hit the like and subscribe button and leave us a comment. Thanks so much, everybody.